Now, we have not seen such demand since 1967, and that's a 55-year high. So we have mystery buyers, big central banks, big whales buying incredible 400 tons of gold in the third quarter, bringing the total amount this year to almost 700 tons. Now, there's been an amazing jump in central bank buying over the last 10 years, ever since the '08 crisis. And if this buying momentum keeps up, central banks might even crack a record 1,000 tons in 2022. And that is a lot of gold. We are talking about the annual gold production of China, Russia, and Australia combined. That is incredible. Now, the great de-dollarization has begun, and money is flowing into the ultimate asset, which is gold. Now, when you and we stack gold, we do it mainly to store wealth and have some money outside of the financial system. But when central banks buy gold, it's because they know the game is up. The music is about to stop and the great monetary reset is coming. And this is the big problem with fiat currencies. Even the issuers of fiat know that they lose value over time, and it is a game that you will eventually lose, guys. Even as the price of gold is falling thanks to the rate hikes, even as we are moving towards a recession, central banks know they have to buy now while prices are still attractive. Buy now when the masses are still sleeping. And here's the thing, this gold buying spree, this 700 tons, is most likely underreported. According to the World Gold Council, not all institutions report their gold holdings, or they may do so with a lag. So we could end the year with an even higher number. And you might be wondering, why are central banks even buying gold during this difficult period? We are in a currency crisis, there's a dollar shortage going on, so shouldn't central banks start stockpiling more US dollars? Well, yes and no. If central banks only hold US dollars, they are guaranteed to lose money over a long period of time. No ifs or buts. And we can see the purchasing power of the dollar has evaporated by 97% over the last 100 years. For example, in 1913, when the Federal Reserve was first created, $1 back then had $26 of purchasing power, and you could buy 30 chocolate bars with it. And today, that same dollar can only buy you a coffee from McDonald's, and that is if you are lucky, right? And it's only going to keep losing value until a dollar will be on par with a roll of toilet paper. And this is the fundamental reason why gold is held as a store of value. You can't print it from thin air, you either have the physical metal or not. However, the most interesting thing about the report is how the biggest whales are secretly hoarding gold. Now, who exactly are those mystery buyers? We have to investigate further. We can see many central banks reporting their numbers, showing us exactly how much they bought. For example, we have the Bank of India buying 17 tons in Q3, the Qatar Central Bank buying more than 15 tons, and Uzbekistan adding 26 tons to their reserves. Now, Turkey is another big buyer, stockpiling 31 tons in Q3, making it the biggest reported gold buyer in 2022 so far. But there's still a huge amount of gold still unaccounted for. Around 300 out of the 400 tons were bought from mystery buyers who want to stay in the shadows. And we are going to investigate who exactly these buyers are. We're going to take a guess. Now, obviously, the World Gold Council themselves have an idea of who they might be. And according to them, not all countries report their gold purchases regularly, including major ones like China and Russia. But there's also going to be a mystery buyer that I believe is a game changer. And no, it's not China or Russia. Now, firstly, we have to eliminate Russia as the mystery buyer. Yes, Russia has enormous stockpiles of gold, and they are the second biggest producer of gold next to China. But this also means there isn't a need for them to import gold from the rest of the world. After all, they are under heavy sanctions, and their gold refiners and physical bullion have been banned from the LBMA. So it's also very improbable that Russia is freely importing tons of gold from overseas. It's actually the other way around. Russia has rerouted the majority of their gold exports to China as a result of the ban, and they are reportedly selling it at a discount of up to 30%. Now, just in July alone, China imported over $100 million worth of Russian gold. That's almost a 5,000% increase from a year ago. In fact, Russia's central bank issued a statement saying that they are not looking to add to their gold reserves because it will push the growth of their money supply. Essentially, Russia is not looking to print rubles to buy up their own domestic gold supply. They are not looking to create an inflation nightmare. They need to sell their gold production for foreign currencies like the yuan to buy imports for the country so we can cross Russia off the list. But if I had to bet who was responsible for the mystery buying, I would place my money on China. Now, China has been known to silently stockpile gold for stretches of time, right? We are talking about years and decades before suddenly declaring, hey, we now have double our reserves from thin air. And we can see since the early 2000s, China has been buying in secret year after year and only declaring their holdings when they are ready, right? And that's why we can see all those beautiful spikes up from 600 tons in 2008 to over 1200 tons by 2010. And the same thing happened in 2015 when their holdings spike up again by almost 1,000 tons to their record high of 1950 today. So it's entirely possible and very likely that the 300 tons unaccounted for belongs to China because the incentive to buy gold is extremely high for them. Remember what the Chinese have been saying over the past 9 months? They have seen Russian assets getting frozen and they have been slapped with a ton of technology sanctions. There's a genuine worry that their huge holdings of US treasuries are also at risk as well. And that's why we even have the Chinese regulators meeting their state-owned banks to discuss how to protect their overseas assets from sanctions. And the number one way to sanction-proof your reserves is to hold physical gold. China has been buying tons of gold in huge amounts, especially over the last 5 years. We can see huge imports of around 1,000 tons a year on average, and this is fueled by strong consumer demand. Local Chinese people, they are buying gold bars, they are buying a lot of coins, they are buying lots of jewelry because that's how they save. The Chinese yuan is crashing and the property bubble is deflating, so they only have one place to store their wealth, which is gold. And the price premium on Chinese gold is a whopping $36 today, and it went above $50 just a few months ago. So international gold is still flowing to China, and it makes sense for traders and countries to sell their gold production to China at a higher price. And it is not a stretch to also believe that the Chinese central bank is quietly hoarding gold and keeping it secret until the time comes. Because once China announces their true gold reserves, it will likely come with an agenda and it will be a catalyst to accelerate the dollarization. Now, while I believe this massive buying is probably from China, right, I cannot rule out this wildcard buyer because if this is true, it is a huge game changer, and I believe there's a chance that part of this mystery gold buying comes from the Middle East, in particular Saudi Arabia. Now, in the Middle East, Saudi Arabia holds the most gold reserves at 323 tons, and I believe they're going to keep stacking more gold over the next few years, and it is very likely that they are doing it in secret. Because we need to understand what buying gold actually means. When you purchase gold, you're actually selling dollars. You are shorting the dollar in exchange to go long on gold. You are telling the world you don't have faith in a reserve currency and there's really no other way to spin this. And right now, tensions between Saudi Arabia and the United States, they are at an all-time high. And we are seeing very interesting moves by the kingdom, like their interest to join BRICS. And this is serious because if one day Saudi Arabia prices their oil outside of dollars, it could open a whole can of worms for them. Now, firstly, it would break the petrodollar system, which means dollars are now less valuable. Then we'll see a cascading effect of countries starting to move away from dollars, and this will cause two things to happen, right? The first is the weakening of the dollar. Now, the dollar has been on a tear this year, with the dollar index rising non-stop from 95 all the way past 110 today. But that could reverse fast if the dollar becomes less useful. This will cause Saudi Arabia's $450 billion worth of reserves, a lot of it are in US dollars, to lose value as well. Now, the second effect this will have is on US treasuries. Because now there's less incentive to hold dollars, right? There's also going to be less money flowing to treasuries. And this will cause bond values to drop as Saudi Arabia's stash of $120 billion worth of US treasuries to lose value as well. So if you're the Saudis and you're trying to de-dollarize without causing a panic, you definitely want to keep your gold purchases secret. There's absolutely no benefit to announcing how much gold you have bought. And here's the interesting part. Saudi Arabia's gold buying habits are exactly like China. Every time they bought gold, it wasn't reported until they declared it to the world. We can see that since 2010, Saudi Arabia's gold reserves haven't increased by a single ton. The last declaration was because of a difference in accounting, and that doubled their reserves to over 320 tons. So it wouldn't surprise me if 5 or 10 years down the road, they have another accounting error and their gold reserves jump by another 100%. Because right now, Saudi's gold is only a tiny fraction of its total reserves. Out of 1.7 trillion riyals worth of foreign reserves, only 1.6 billion is allocated to physical gold. That's less than 0.1%. It is a drop in the ocean. And that's why Saudi Arabia could very well be part of this gold buying spree. But let's shift the conversation back to you and me. I think we can all agree that the signs are getting clearer, that the dollar is in decline and fiat currencies in general, they are doomed. But we need to have some private money out of the banking system just in case, we know that. Now, just take a look at the recent Credit Suisse crisis in Europe. We have depositors doing a mini bank run on it. People are literally withdrawing their money from the bank, pulling out their deposits and cash because confidence is eroding. We know the banking system runs on leverage. It could be 10 times or even 20 times in some cases. And if money is suddenly pulled out, someone is going to be left holding the bag. And I don't want that to be you guys. People are starting to wake up, right? Even during this recession, we are seeing the demand for physical gold stay strong. Even as the gold price is coming down, people are still buying. Now, if we strip out the ETF, technology, and central bank demand, we have extremely robust demand from retail investors and the man on the street. The demand for bars and coins plus jewelry is at a 7-year high at nearly 2,500 tons. This tells us that average people and investors know that gold is a store of value. They know their wealth is being eroded away by all this money printing. So they're stacking gold bars, they're buying gold jewelry that they can pass down as family heirlooms. And it's happening everywhere, guys, from the United States to China and India. And I really hope that we take this opportunity to put gold on our radar as the markets continue to crash. Because something interesting is happening in the price of gold. Yes, the price has come down from its recent peak of $2,000 an ounce to slightly under $1,700 today. Almost every asset is crashing, but compared to the S&P 500, which is down nearly 22%, gold is only down 7%. It is performing 3 times better than the stock market as interest rates go up. And this also tells us that investors deep down know what true value is and how gold is a resilient store of value. Even as demand destruction is happening, even as power is destroying the economy, people are holding on more to their gold than their stocks. So let's all wake up and smell the coffee, right? Let's smell the coffee. The great monetary reset is coming, and I believe central banks are starting to prepare for the big what if, right? What if one day a gold backed currency comes out? What if 5 or 10 years down the road, China comes out and says, hey, we have 10,000 tons of gold, we have 20,000 tons of gold, and we are going to back our currency with it. And this will cause chaos, guys, and cause global currencies, especially the dollar, to plunge in value, especially when fiat today is backed by nothing. So we need to be prepared because there's a lot of scary things coming for us. We are talking about CBDCs, the digital dollar that is coming real soon. There's no escaping from it. Plus, we have record inflation today. Just ask yourself this. Do you think the Fed can truly get inflation under control? Do you trust that Powell can stick the landing without having to pivot and printing money again? Because I personally believe we are going to live in a new age of inflation. It's going to be a brave new world. 1 or 2% won't be the norm, guys. We're going to get used to 3 or even 4% inflation going into the future. So get prepared. And this Christmas, maybe consider putting gold as part of your shopping list. So let me know what you think. Who is the mystery buyer of all that gold? Is it China? Is it Saudi Arabia? Or is it someone else? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.